Disclaimer. The information contained in this newsletter and podcast is not financial nor investment advice. All trades and investments discussed are solely my own. All opinions are my own and should not be construed as advice. If you do decide to trade or invest in any of the markets discussed, you do so at your own risk. Hello friends, thank you for being a subscriber to Blockchain Immersive. I sent out a survey last week asking you if you wanted to receive a regular email or podcast, and the answer was yes. Nearly all of you asked that I also add other markets to the mix as well, and I will be glad to do so. Thanks again for participating in that survey. So let's get to it. Despite the market being down, the cryptocurrency and blockchain and Web3 space is incredibly active. In fact, new projects are coming online and millions upon millions of dollars are pouring into the space. As I've said before, it is during this time that smart monies and smart people are looking into these markets. Two pieces of news came in this week that I thought was interesting, and the first one is the New York Museum of Modern Art looking to buy NFTs with the proceeds of a $70 million auction. Now, this is pretty big because it just goes to show you that the NFTs are still popular and museums are looking to get into it. Now, just because they're down doesn't mean they're out. Okay, definitely volume has dried up just a little bit, but that's with like all markets when you go through these types of what they call bear markets. But the fact that the New York Museum of Modern Art in New York is looking to buy NFTs is a very good sign. Another piece of news came in from JP Morgan, and they're backing with $20 million an infrastructure startup, Onera. Now, this is really big because Onera is creating a product that sort of is going to bridge the blockchain technology and traditional finance. And this, again, is proof that we are still very active in this market, and traditional finance knows just how important this market is. And that's why they're continuing to put money into it. I mean, there's no doubt about it. I mean, you're going to have bad news, right, here and there. But overall, if you look at all the news that is coming out in this space, it's actually, overall, it's good. I think a lot of people get bogged down because, Bitcoin is down and this and that. But again, as I've said throughout my courses and throughout everything that I've published, these are good times because it allows you to look at these markets because they're pretty much a fire sale. So, and we'll get into that at another time. So, in this part of the podcast, I'm going to call it Trader's Corner because I'm going to be discussing various trades I took and general market sentiment. So, I don't know if you've noticed, but this last week was a fairly bloody week for crypto investors, at least those that were on the long side, the ones who were mostly buyers. And the reason why was because we had that darn inflation report that came in for the U.S. And it shows that although the number is, slightly down, and here's the chart for it, is slightly down from, say July, it's still really high. I mean, look at this last number. It was, 8.20. Remember, this is lagging, so we just got the August number, and whereas in July it was 8.64 or something something almost even 9. It actually hit 9 and then came back down, so it's still really high. Okay, really, really high. And just to give you perspective, the Fed, the Federal Reserve, their set inflation goal is 2% annually. So we're pretty high here, but if you can see over the years, it sort of vacillates back and forth between, but it stays low. It stays relatively low, but this is a huge spike, and we haven't seen a spike like this since this area. This is 81, in the 80s. So this put a lot of downward pressure, not only on the cryptos, but also the stock market as well. So all major stock markets did take a nosedive. And what this is teaching us is that, inflation still remains a worry. Now, the Fed, the way they battle this is they increase interest rates to sort of tamp it down. But I think personally, they're just throwing an old solution to a problem that is not caused by the same type of problem we had before. So when we had inflation before, we had sort of several sort of systemic issues, but now inflation is not really caused by the systemic issues, but really by supply chain issues and people, the workforce issues and things like that. And raising interest rates may not be the most effective way to do this. But again, I'm not an economist, but this inflationary period is very different from others. And that's all I'm going to say about that. So as you can see, we are very high here. And, it's unfortunate, but it does put downward pressure on the market. And if you're not comfortable with short selling, obviously, this is actually a really hard time for you. Now let's compare the inflation chart with Bitcoin and see where we are. Now, because there's more data here for inflation, obviously, look, it goes all the way back. I only have, from 2021 and onward for Bitcoin here. So let's just go to the beginning of 2022. We have Bitcoin at $44,000. And if you notice, inflation is starting to go up. This part here. And notice, as inflation is heading upward, Bitcoin is heading downward. So we can see that there is a correlation between high inflation and low cryptocurrency prices. And the reason why it didn't rally yesterday, because look, inflation did tick down, is that because the price is, because it's still pretty high. And it's just spooking the market. But again, what this is actually creating is a fire sale. That's what it's creating. So I'm not too worried about it. Like I said, I sort of trade both sides of the market. So I actually like this type of stuff. And speaking of trading, let's discuss some of the trades of the week. And now you'll see my chart here of Solana. This is a 3-hour chart. So that means each bar here is 3 hours. So what I did is my set of indicators that I use gave me a buy signal on the 11th of September. And I went in for 500 tokens. Okay, 500 tokens. And what I did is I did leverage it a little bit by 1 or 2 times. So I put in a fraction of the money and then borrowed the rest of the tokens. I don't recommend you do that. And I'm actually against that for new investors. And I'm also against really using it like high leverage. But in this case, I only used 2x instead of 5 or 10x. And I got in here. And then I sold right at this X here. So this was actually a really good trade. It was about 3-point move on 500 tokens. So that was actually really good. And then a few hours later, I short sold when I got a sell signal. And again, I short sold 500 of these. And I got out today, the 14th, with a approximately a little bit over 3 points profit. Now, I sort of broke my rule here. I got out before I got this X or the TP or the take profit, because I was seeing that there's a lot of oversold pressure here. This market really crashed, and this is because of the inflationary report. This is what happened. So I went short and then got out here because I think it might bounce, and they usually call that a dead cat bounce, where the market goes, bounces, crashes, bounces up, and then bounces back down. So right now, I'm expecting, just in the short term, it could be a few hours even, we might just have a little bit of a bounce up. And so I just got out, and it was pretty good. So this week was a really good week for trading. And if you're wondering, the indicators that I'm using here, I was researching companies for different types of indicators. And the reason why I do that is because I'm always learning. I'm like you. Okay. I'm always learning, always looking for better ways to trade these markets, better ways to create more profitable situations for me. And so I found this company called Zierman Trading. And they have these really good indicators that pretty much do everything that I've done in my own trading applications, but they made it a lot simpler and a lot easier. And I'm not a coder, so I couldn't make it as nice and streamlined as this. So if you're interested, you can go to blockchainimmersive.com/Mr. Z, and you can get your hands on these indicators, especially if you have TradingView. Now let's talk about other markets here. Let's say outside of the crypto sphere, and this is something that you've wanted me to discuss. So I'm going to do that. And today, what we're going to discuss, and every podcast I'll cover a different aspect of another market. Today we're going to cover commodity futures, and commodity futures is what I started with. A lot of people enter these markets, they start in the stock market, right? I started with commodity futures and foreign exchange, and so it will always be my first love. So FINRA defines commodity futures as: commodity future contracts are agreements to buy or sell a specific quantity of a commodity at a specified price on a particular date in the future. Commodities include metals, oil, grains, and animal products, as well as financial instruments and currencies. And I mentioned that also in my courses as well. Now, most of that doesn't mean anything to us, right? We're like, okay, well, they trade metals, they trade all this stuff. But really, the commodity market is very important because everything that we eat, right, from the bread, everything, after bacon, or vegetables, like soybeans and oats and corn and wheat and all of these things and much more, are reliant on these commodity markets. I mean, you might go to a small little market and buy yourself, a dozen eggs, but those prices are reflective of the larger commodity market. And the commodity markets are really made for producers, refiners, on a large scale. So like, for example, let's say Kellogg, right? The cereal company, they probably use a lot of wheat, right? But the thing is that they need to lock in their prices because wheat could go through the roof, right? Wheat could just go right through the roof, and they'll pay more for it. So if they go into the commodity markets and buy wheat in the future, right, they lock in their prices. So that's why we often don't have wild swings in our food prices, even though now is an exception because of very high inflation. Normally, that's why a dozen eggs really doesn't change price from one month to another, or a loaf of bread. Only now that we're in a very weird economic situation. Now, how do we benefit from that? Well, it's very similar to the crypto markets. We can buy and sell commodities. We can easily buy and sell commodities. And here, let's look at one of these charts. We'll go to, let's do a new layout, and let's look at, corn, for example. I'm just going to put it up here. And so this is the corn market, right? Let me change this chart to a normal bar chart. And this is the corn market. And and as you can see, it's very volatile. And this area here, that's actually a gap. No trading took place here. It just opened way low right down here. So this is a normal chart, and it looks, sort of like the crypto charts, right? But the difference is that crypto has continuous movements. You won't see any of these gaps in crypto. And crypto is 24/7, whereas corn will close at the end of the day and then reopen the next day, and they're closed on the weekend. So if you find yourself if you're in this market and it goes against you on a Friday afternoon, you're screwed. I mean, you're going to have to wait until Monday to get out. And that's happened to me quite a few times. So, for example, with corn, for every cent that corn moves, so from 684 to 685, that's $50, either profit or loss for you. Now, the beauty and the risk of commodities is that when you invest in it, you don't put a lot of money down on it. You put like a percentage of the contract down, and then you're leveraged. So that means that every point that moves against you or for you is magnified. And that's the danger of leverage, but that's also the beauty of commodities, because obviously if it goes in your favor, you can do really, really well. So I love the commodity markets, and at some point I'll show you some trading for that as well. Now, if you really interested in commodities, let me know. I have at the link below, there's a survey, and just let me know if you want me to create a commodities trading course, and I will do so. That is just, one of my loves. So there you have it, short and sweet, or not so short, but hopefully sweet. Some newsletters will be longer, some will be shorter. I find that if I bog people down too much with information, you're just not going to get a lot out of it. So I'm going to try to keep these podcasts informative and compact. In the next podcast and newsletter, I'm going to discuss the options market, and that's something many people have asked me about, and something that I've dealt in many, many times, countless times, and I still do. I will also discuss a topic that is sort of fairly controversial. It's essentially a statistical site that counters the government's reporting of economic indicators. So like, for example, we had the inflation number yesterday, right, in the US. This site says that it's actually a lot worse than the government is reporting. And I think the truth is somewhere in between. I think they're right. I think the government, because the way they issue some of these numbers, they're excluding this, adding this, and so it's not like a raw number. So this service actually offers a raw number using sort of like a running total. And so of course governments around the world reject it, and because they say, oh no, that's not how we report these things. But I'll show you in the next podcast. So, and again, it's not conspiratorial. I mean, these are actual numbers, so you'll see that. So anyway, you don't want to miss that. I will speak to you in the next podcast. See you then.